How's it going, everyone? It is the Zoomer Value Investor here to talk to you today about a trend I've been seeing in the markets. I really wanted to call this out before I just forget, and I want to make a video about this because I think this is a larger trend we're going to see play out over the course of 1 to 2 years. I think basically what I'm trying to say is there's one asset class, particularly tech, that I think institutions, big money players, old money, stuff like that, are fleeing out of, and I think they're fleeing out into some other asset classes. And there's one in particular I'm going to talk about later in this video. So not going to take too much of your time, but there's a massive wealth shift happening right now, and I'm definitely going to want to call it out here in this video. So first story, this CrowdStrike IT outage. I think this is kind of like a catalyst, something that's been coming. There's been a big tech run up in 2022, 2023, 2024. Not 2022, sorry, 2023, 2024. And it's kind of at what point, do these things peak out? Do these technologies, do these business mechanisms of tech, the market in tech, does it peak out of its valuation? Does it peak out, And CrowdStrike, obviously, really hot stock. Super high valuation, even after the drop with the global IT shortage outage. But look at this, guys, 35% drop almost on CrowdStrike. It's definitely something to note. Now, I think quality is going to matter because there was a lot of tech stocks in my portfolio that weren't super affected by the turbulence we've been seeing in the tech markets. Palo Alto, Palo Alto's been doing fine. Just did a video about this one recently. Since those July outages, really it's just kind of it's about break even, right? Or down maybe like 5% or 3% or something. Really not nowhere near like 35%. And then you got a company like Palantir, which this is more like defense technology, defense algorithms, Department of Defense, like a technology liaison with them that provides like tech platforms for them and stuff. So this one's doing pretty good, even during the outage and stuff. Obviously, like a pullback, like 5%, but not even nearly as much as even the diversified S&P tech sector, XLK. So the XLK, this is the technology. It's only the tech parts of the S&P 500. This is down almost 8%, guys. So what's going on here? It definitely begs a question. I think a lot of institutions are starting to get spooked out of tech. I think CrowdStrike was kind of a catalyst for this, but it's been a long time coming. I think there's also geopolitical tensions that are happening right now. I think this is a particularly contentious election year, but I don't want to feed into that too much because as value investors, we really want to just stay focused on our companies. There's going to be a lot of geopolitical risk always and stuff like that, especially in the modern era, the news era, information era. There's also two wars, the Ukraine war, the war in Gaza, as well as a potential war happening in Taiwan that people are talking about might happen and might be the catalyst for like a world war. But I wouldn't, again, feed into that too much. As value investors, just stay focused and grounded on our companies and not in like doom and gloom or whatever. But I think that's part of it, right? Is, old money, stuff like that, they can't afford to just sit idly by and be in these high multiple companies like CrowdStrike that has a price to earnings of 481 even after a 33% drop, or even a company of NVIDIA of that matter. So let's take a look. And NVIDIA is a company that really grew into its valuation, but it's still flying really high. It says 66 PE right now on Google, and that's after because during the CrowdStrike outage drop, it dropped 12.5%. And that's not including, dropping from its all-time high, which would be more like a 15% drop. So, really interesting things happening in tech. I think this is an indicator. You see Google down 12%. You see Amazon, as soon as CrowdStrike's up these, Amazon's down about 9%. So when something like a big company like CrowdStrike this goes down or whatever, it just kind of has like a ripple effect, right? And the QQQ is down about the same as the XLK, about 7% on the QQQ. So if this is happening where a lot of this kind of, where the tech market's just kind of going down, just kind of like a pullback, I wouldn't say it's a correction quite yet. It has potential to move into the minus 10% territory to be a correction. Obviously XLK down 7%, but this is for sure a pullback in tech right now. If it goes down 10%, it could be a correction. If it goes down 20%, it could be a crash. So we'll definitely keep an eye on this. I think this could be, we'll see, this could be a part of a bigger pullback. But the other thing I really wanted to highlight is the REIT market. The REIT market, almost in lockstep as the technology sector started to sell off, started to rise. So you see Realty Income, this is almost like a blue chip REIT. That thing went up like 10% in this past month, right? And these are quality companies, well regarded. This is Alexandria Real Estate. This is one I've talked about in one of my videos. I'm a pretty big bull on. So this one even got a little pop. It pulled back a little, but it's still up, net up. I mean, look at this pop, from July. So that's a sign of strength, at least in the stock. And then KRC's been on a tear. Kilroy, this is another one I own. I'm a big bull on. And the thing that's exciting about why I wanted to call this out is I think this is a larger trend we're going to see in the next year, 2 years, 3 years play out, where it's the return of strength for some of these particularly quality REIT companies. Now, just because all of these are popping, in the last month, Crown Castle went up 10%. This is another REIT company. Again, guys, almost in lockstep with when we were seeing the outages. 12% gain right there. ADC, this is another REIT, 11% gain in the past month. As you can see, almost in lockstep with in the early July when the Crowdstrike outages are happening. That's when Agree and all these other REITs start getting strength. So it is what I believe a very obvious sign of institutional money trying to move money around and get into these other plays when they think something's going to happen. And as individual investors, we can really make a lot of money when we notice patterns like this. So I think this is really exciting. I really wanted to call this out, guys, that the REITs look really good. REITs look really good right now. As someone, and keep in mind, these REITs, lower beta, they're not going to move as fast as stuff like tech stocks, but enjoy the ride. A lot of these REITs, they pay dividends along the way. You get a 4% yield here with Alexandria. And me personally, if you watch my video, I made the case for why Alexandria might be undervalued as much as having a closer intrinsic value of something like $200 per share, because they're trading pretty much at book value, and this company tends to, this is a very highly reputable company, insane returns historically, even after this insane pullback, where they have a huge reputation where they tend to have trade higher than just 1-to-1 with their tangible book value, whatever it was that I talked about in that video. It's a historically very low valuation metric for them. So I think there's a lot of room for gains there for Alexandria, the life science REIT. And then Kilroy, I think Kilroy, as you can see here, still kind of hasn't recovered from the CV19 drops. A lot of REITs still haven't recovered from CV19 drops. But Kilroy, they have a lot of the kind of A tier, S tier real estate in a lot of big cities out in the West Coast, California, as well as places like the Texas Triangle, cities like Austin. So really some of the biggest economies in the United States, they have the best office space, skyscrapers, just office space in general, real estate buildings in those cities. So I think Kilroy slowly but surely will have its value explored by the market, as it has been seeing in the start of July. That's a huge pop, guys, 15.5%. So with that being said, that's going to be the end of this video. These are start of larger trends, guys. I think there's still time. Me personally, when I get cash, in this past month, I've been looking to lump into these plays a bit more and add to the thesis a bit more. Put more skin down on Kilroy and put more skin down on ARE. So hope you guys enjoyed this video. Really exciting time to see this pattern in real time before it's played out and have all that money make potential. So that's all for this video. Peace.